Good evening, FX Street. Good evening, webinar attendants, participants. My name is Larsson. I'm here to present our trading signals, which we post on FX Street every morning. Before we go on with this webinar, we have posted a disclaimer and risk warning that you should all read before reading and following on, try to understand our publications and analysis. It will be on the webinar for the entire session. It is pretty long, sorry about that. Apparently it was published twice, so you only have to read it once. Anyway, I will start here. Thank you for attending this webinar. I hope you can hear me clearly. My name is Larsson. I am co-owner and co-founder of Financial Trend Analysis with my co-founder Klaus Ikast. We are a Copenhagen-based technical analysis company. We only do technical analysis. No macro, no fundamentals are included in our analysis. I hope you all have all read the disclaimer by now, and I want to make sure that you all understand this is just a training. We do not give any recommendations or tell you where to buy or sell any kind of assets. We will, however, use the publication that we published this morning, so it's a bit up to date with the market moves. Good. We will start with our today's trading signals, which was posted this morning. You should all be able to see it by now. You can't see it all. It's a bit long. It's a whole page. But we will start with the most important ones, the most important assets, the most important markets, which of course is the FX markets. And I guess you are most interested in that one. But the highlights, just to give you an overview. To the left, we have the markets. We have some FX currency majors. We have some cross rates, some Nordic or Scandi FX rates, if you will. We have some emerging markets crosses, and we have the dollar index down here. Then we have some fixed income, some Eurobonds and cheap notes from the US, yields, some equity index futures, and also some cash index. And down at the bottom, finally, we have some commodities and the volatility index. CRB means it's a commodity index, Jeffrey's commodity index. We have the crude light also. Good. The way it's built, we have the asset or the product to the left. We have a last price. That is the last price at the time of publication. This time we published it. This analysis and send it to clients at 8:10 Central European time. That is 10 minutes past 7 GMT. Sorry. Next we have the strategies columns. You can see technical strategies says over here on the top. We have strategy 1, entry, a target, strategy 2, stop / entry, and a reverse target. Okay, so for argument's sake, let's take euro dollar. We are long in euro dollar. We have been long in euro dollar for a couple of days now. We have a target of 152.80. We went long, I think it was 2 days ago. Not at this price, on the last price. If we opened the euro dollar long this morning, we would have the opening price or the entry level would have been the last price added or subtracted as spread. We have a stop 148. That stop is also a reverse, meaning if we hit the stop, we sell the double amount and thereby go short. And then we have a reverse target, a short target of 147.30. Right. Same again in dollar yen. We are short. We have been short for a couple of days. You cannot see the entry level. That is for clients only. And we have a target of 88.00 and a stop of 89.58 and a reverse, same level, and a reverse target of 90.97. The yellow highlighting means that there is a change in that field from yesterday's publication or last update. That means that we have changed in dollar yen, we have changed the price from what it was the previous day. If, like in cable, all fields are marked yellow, it usually means that we have gone from a long to a short, or from a range trade to where we have a position. If we look at the dollar Swiss, this morning we didn't have a position, or we don't have a position. We are waiting for the market to move either above 1.0225 for a long position with a target of 1.0280, or waiting for dollar Swiss to trade below 1.0070 for a short target of 0.9915. There is, of course, some stops hidden behind this. As long as we are trading between 1.0070 and 1.0225, we do not have a position in dollar Swiss. There are some stops, of course, hidden behind these numbers. But unfortunately, we do not publish them on FX Street. You have to be clients to see them. I can briefly show it to you, what it looks like. Now you should be able to see at advanced trading signals. Hope it's clear now. We have the same strategies as you saw before. We are long euro dollar, and here you can actually see the entry level, which is 1.4907. That's where we went long. You can also see the reverse stop if we get stopped out at 148. Then we went for a target of 147.36 with a stop of 150.05. Same looking at the dollar Swiss, going long 1.0225 with a target of 10276, and we have a stop at 10084. That is not a reverse. That is just a stop. But if we go long in dollar Swiss and we do not reach the target, but get stopped out at 1.0084, we do not cancel the go short strategy on the right. Also, if we hit target at 1.0225, we still keep the option open that we can go short below 10070. Yes, that is correct, that one has to subscribe to see the advanced table. That is for clients only. That is correct. Okay. Going back to the trading signals, which is published on FX Street. Over here we have something called current risk reward. The current risk reward means that that is the potential risk towards the potential reward one gets if one gets take a long position at the opening this morning at 140 at the market price. That means there is 0.8% down to the stop, and there is 2.4% to the target. Again, we have on the advanced trading signals, I will quickly switch back to that one. We have something called the entry risk reward. That is calculated on the basis of the entry price where we enter the trade. So that could be different because from the current risk reward, because that it was a different price and a different day. So here you can actually see that when we ended the trade in euro-dollar, we had a risk of 0.7% and a potential reward of 2.5%. Market hasn't changed much, so it's almost the same. But if you're looking at the dollar-yen, we have an entry risk reward at 0.05 to the risk and 1.3 potential profit. That has changed, and you can see at the moment if one took the position this morning, the risk reward would not be that good. So we're actually a bit ahead of here. Okay, going back to the trading signals, which you can see on FX Street. There's another column here, 5 days change. That's just an information of how the euro-dollar, dollar-yen, how the market has been trading the past 5 days. It's just an average. On the right side, we have some intraday technical support and resistance levels. There are 3 support levels and 3 resistance levels. They change every day. They are recalculated every morning. It's purely a mathematical model. It's based on yesterday's trades, and they're only good for the day. In the middle, we have a pivot point or a key point. That is where there's a balance, mathematically balance in the market. The blue fields indicate where the market has been trading so far. So up until the open at 8:10, euro-dollar has been trading between support 1 and resistance 1, which is quite normal for a normal market day. If there's a market with high volatility, you will probably see more swings or more colors on either side. You can see there's some variation down in your Starkey and in your check. Any questions so far? We publish this every morning at FX Street, usually around 10 o'clock Central European time. It is delayed because our clients get it a little bit earlier than FX Street. So if you want earlier than that, you have to subscribe to it, which you can do on our website. And I can see that Mo just published the report. We have an excellent cooperation with FX Street. Yes, Asher, which pair do you want me to explain? We can take cable, sterling against dollar. Yes, we opened a short position this morning in cable. We did not have a position from yesterday. It was a new position we opened. We opened it at the market price. We sold a position, so now we are short in cable at 165.49. Excuse me. Subtracting as slippage or a spread, which we usually do when we calculate our performance. So we are short in the market, and we have a short position with a target of 163.80. Our stop is 166.50. If we hit that level, we will buy the double amount of what we sold this morning, and then we are long until 167.80. We can choose, tomorrow we can choose to close down the position, and it doesn't matter if we have hit the target or a stop. If we feel that, well, we're not sure where it's going, it doesn't look like it's strong enough to go lower, or that it will probably turn around here, we can close the position tomorrow morning and thereby either go on range and say, well, we don't know, we don't want to be in the market anymore, or we can take a profit if there's a profit, or we can actually turn around and say we will go long tomorrow morning. We're updated only once a day, and that's every morning. We keep the stops during the day. We don't change them. We don't change them at all. We don't always want to trade on reverses, but we do it. Because sometimes if the stop is placed with a strong technical support level or resistance, we very often see a reverse reaction in the market, and that could usually be very strong. The duration or time horizon on our trades or recommendations here are usually 3 to 5 days. It's more a guideline than it's actually a strict rule, because, I mean, like in Euro-Swiss, nothing has been going on for about 2 months, so there has been basically no trades whatsoever. On the other hand, if you have days with big volatility, you can see either stops or hopefully some targets being hit within a few hours after publication. But we try to have a time horizon of usually within about a week. Yes, you can. Well, you can see the old entry levels on the old positions if you are a client. If you are a client, you will receive this one. It is the same, all the same strategies. It's the same stops. It's the same stops and strategies, but you will be able to see the entry where we entered the trade. Like in dollar yen, we went short at 89.12. There will be nothing in cable because the entry level is the same as the last price this morning. But if we still have to short tomorrow morning, you will see the entry price being written here in brackets in the entry 1 column. And then there will be calculated entry risk reward on this column in cable. But at the moment, the entry risk reward and the current risk reward at the time of publication is, of course, the same. You can also see all the stops if you are a subscriber to our analysis. There was a question about, do we always trade on the reverse? We do it 90% of the time, yes. We can, however, choose not to have a reverse strategy. It is explained in our reading guide on page 2, but usually we have a reverse strategy. And the reason why, again, is that usually when we see a support or resistance level is broken, or it could be the reversal of a trend or the like, you usually see a strong reaction in the market in the opposite direction. And why not try to catch that one? For the service, if you're a subscriber, you can buy this for the starting basic price is €400 a month. You will get the advanced trading signals, all crosses, everything included. You will also receive one-pages, which we do on single assets, like one page on euro dollar. There, we we posted a euro-dollar long-term view on euro-dollar on FX Street a couple of weeks ago. But as a client, a paying customer, you will of course receive it first. Also, there are discounts for longer subscriptions. If you do have other wishes, if you don't need the whole report, please let us know. Maybe we can work out a deal. How do we treat trending pairs? Well, what we do when we look at the each FX cross, we look at separately. We look at it separately. So normally one would say that yes, Aussie dollar and Kiwi dollar are trending pairs, but we can actually have two different analysis in those, or recommendation in those two pairs. We could be long in Aussie dollar, and theoretically we could be short in Kiwi dollar. So as we said, nothing correlates in the long run. It does just looks like that some periods of time. Yes, you could get majors only if you wanted. Just send an email and we can work out a deal. Normally, if you only want one group like majors, that would be 129 euros a month. If you want the majors and the cross rates, then you will get the second group for a discount of 69 euros and then 49 euros for each additional group. Where do you see your pound, I think euro sterling, going next 3 months, please? Well, as I said in the beginning, we do not give any advice on this. This is a training session. This is an explanation of how to read the trading signals. So we can give you our view on euro sterling in the next 3 to 6 months, but then you have to send us an email from our website, which is www.ftanalysis.com, and that is for clients only. The same goes with the euro dollar. But at the moment, in euro sterling, we are long, looking for 92.03, and that is, we expect that to be reached within maybe a week, maybe a little more. Yeah, I'm sorry to say that I cannot give any advice where we see 3 to 6 months, since this is a webinar about how to read the trading signals. That we can do in a new webinar at some point. Otherwise, please contact us through our website. The last column means that is the last price. That is the price. This is the last column. That is the market price at the time of printing. That is the price, the last printed price in, let's say, euro dollar was 149.19 at the time of publication at 10 minutes past 8 Central European time this morning. When we work with our strategies and do our analysis, we look on charts. We look on monthly charts, we look on weekly charts, daily charts, and intraday charts, usually hourly charts. And we always do that no matter if we should do a short-term analysis or long-term analysis. These analyses are usually 3 to 5 days analysis. But we still look at daily, weekly, and monthly charts before we decide what to do. We look at them every morning with fresh eyes and take a decision. We don't wait for the FX cross to reach our target or our limit if we don't feel that the trend is still there, or if the market conditions has changed, or if the chart tells us something differently. I think that FX Street can post I don't know if they can post a link to the Euro forecast, but I do believe our one pager is on FX Street. Otherwise, you can see our long-term view on euro dollar on our website. www.ftanalysis.com. If you go into our website and if you look into technical outlook, you will find the forecast on euro-dollar. It was posted about 2 weeks ago. But Abel, you can find it on our website. That's not a problem. It's there. Subscribers will, of course, receive it several hours before it is posted on the website. No, we do not take any economic data, any fundamentals, or any macro numbers into account when we do our analysis. We are technical analysts, and we only look at charts. When that is said, of course, I mean, we are human. We know what's going on in the market, so we also look out for what could potentially happen when some big numbers are expected to come out. But we do not take it into account when we decide on our strategies. What our strategy and what our approach to our strategy is, our basic or our most how can I say, approach is that we look at risk before we look at targets. We are not that much interested in where should euro-dollar be in, let's say, 2 weeks. If we believe euro-dollar should go up, if we're bullish on euro-dollar, which we are, we look for where should it break below, at which level should it break below, to convince us that we are wrong. So we are more focused on risk than we are focused on rewards. Of course, we want to make money. Everyone wants to make money, but we want to always calculate our risk, and that's why I would work with risk rewards, as you can see over here. It's not a big problem to say, well, euro-dollar should be in 175 in, let's say, 3 months or something like that. Yeah, but where do you think you're wrong? Where should euro-dollar go to change that view? And that is even more important than setting a price target. That would be like if you are driving a car with 200 miles an hour with no brakes, if you don't have a stop. So always define your stop before you go enter a trade, and that's what we do. If the risk is too high, if the risk is too big, we will not enter the trade. We will wait on the sideline, and we will do like in the dollar Swiss or Aussie dollar. That is what we call a range strategy or wait and see strategy. We do not have a position before it breaks, either above the go long level or the go short level. Normally, when we open a trade, our stop is not longer than 1.4% away. But of course, if you have a longer time horizon, let's say a couple of months, you'll probably have a bigger risk. But we try to keep it below 1.4% when we enter a trade. And we always look to see if we can get the double in reward at least. Any more questions? Thanks a lot, Ashu. If we enter a trade, let's say like we did in cable this morning. If I cannot open a short position with less than 1.4% in risk, I will probably not do it. When we opened it cable this morning, we had 0.6% in risk, which is quite good. And we have a report about a profit around 1%. So that's basically 1 to 2, which is not bad. But if the risk had been 2%, if I couldn't find a appropriate stop level in the market, then I would not take the chance. I look at the charts. I see, well, where have I support levels? Where do I have resistance levels? Is the trend down? If the trend is down, okay, I want to be short. Where will the trend reverse? Where could I place a stop in the market? If the chart tells me, well, the stop, I cannot place a stop closer than 2% away, then I will not take the chance of going short. I will wait and see until other signals in the market gives me directions. So we're trying to managing our risk at all times. The stops, we don't just place a stop and say, well, it's here, and then let's see what happens. It's not like we say, well, we always have 1.4% or 1% or 2%. Try to find where are there normal, so to speak, stops in the market. Where will the trend reverse? Where is a support or resistance level broken? What we also do, we work with trailing stops. That means if your dollar goes up and it's trending up, we can move our stop but still keep our long position. So let's say if your dollar breaks above 150 level before tomorrow morning, we can choose to raise our stop from 148 to, let's say, 148.50 or 149. If there's a new natural stop in the market, that could be the low point in a trend, that could be some kind of support level of some kind. That's not easy to explain without charts, and that is not easy to explain without a chart, and that will take a new webinar which we can do on a later stage. The percentage is calculated. You see the current RR, the risk reward column. It is calculated from the last price. So if you look at the advanced trading signals again, where we actually do have both of them, right? You can see the current risk reward. If you take a long position in euro dollars this morning, you have a risk of 0.8% to the stop from where the market was trading this morning. That's here, right here. So there's 0.8% from 149.19 and to the risk to the stop at 148. There is a potential reward of 2.4% from the last price in the market, 149.19, and up till the target at 152.74. But if you had taken the long position, opened the long position, when we did it a couple of days ago, we opened it at 149.07. Then our risk would have been 0.7% and a reward of 2.5. So this is the risk, the entry risk. When we look at it and we look at the market and say, okay, where can I place a good stop in the market? Where does it make sense when looking at charts? If the stop that I would like to have is more than 1.4% away from where I can enter a trade, I will usually not enter the trade because my risk will then be too big. So what we actually have said, well, we don't want to lose more than 1.4% in a trade. And that's the way we have found out, well, our time horizon would then be 3 to 5 days because of the volatility in the FX markets. Of course, if you're an intraday trader, your risk should be less. But this is not an intraday trading chart or publication. It is for couple of days and up, basically. If you're an intraday trader, you might find the intraday technical support and resistance levels useful. It doesn't give you any direction. It's just where there are some support and resistance levels in the market. You can see they are here on the right. But it doesn't tell you where should the market trade today. Okay. Yes, we will, on a later stage, we will do some webinar with charts, and we can show you how we build our analysis, how we build our strategies, what we look at on a chart to, let's say, decide why should we be long in Eurodollar and why do we place the stop here. That we can do on a later stage, but we don't have time for it today, unfortunately. Okay, any more questions? Otherwise, we will wrap it up from here. What do we mean by the strategy go short? I mean, if we have a downtrend in the market, if we could go short if we think a long bullish trend is about to end, is about to exhaust, then we could try to go short in the market. Well, the approach to do a short and a long is basically the same. I mean, there's no difference. Again, we use the same type of analysis. We use the same tools. We look at trends. We look at RSI strength. We look at exhaustions in the market. We look at candle setups. So there's no difference between short and long. The approach to how we build it would be the same. But the way we do it, I mean, we don't have to reach a target or get stopped out to close down a position. Yes, we do look at patterns. We look at head-shoulder patterns. We look at double tops, triple tops. We look at candlestick patterns. We use candlesticks. We look at doji evening stars, things like that. Yeah, we use that a lot. No, we don't use catalysts. We use RSI. We use Bollinger Bands for especially the FX market, since we do not have any liquidity. We don't have volume graphs, so we use Bollinger Bands. And several kind of candle charts, candlestick formations, and we use Tom DeMark charting or counting. We use Tom DeMark a lot, if anyone is familiar with that. Okay, last questions before we say good evening for today. If you have any more questions or want to have any more information, again, we are on, you can reach us on our website, which I will post here. Yes, we also use Fibonacci's. We use it a lot. We use it for to find resistance and support levels, and also for projections to find out where a bullish trend, how far it could go if we are in unknown new territory. Yes, we use Fibonacci a lot. We believe it's a very strong and powerful tool. When we go into a trade, we go in with a full amount. We don't add up or take, let's say, half a position or 1/3 and then add up if it's losing. If we believe in it, we believe in it. Otherwise, we stay out of the market. And then we use, at the end of it, we can say we use some technical stuff and some other stuff that's kind of a secret. Anyway, I hope that you have enjoyed the webinar. I hope that it is a little bit more clear how to read our analysis, and that you find it useful. If you have any more questions or comments or want to have a free trial, you can go onto our website, www.ftanalysis.com, and contact us and ask for a 2 weeks free trial. Thank you for participating and for listening to this webinar. Thank you very much, and have a good night.